Risk on. Asia, risk on. Europe, risk on. Africa, risk on. North America, markets just on fire from yesterday through to today. Asia markets, the MSCI Asia Pacific Index, broad-based index, up by 1.69%. The CSI 300, we usually bring you the Shanghai Composite Index in mainland China, but we're bringing you the CSI because that's up almost a full percentage point in trading today. The Hang Seng, which in Hong Kong, driven by technology stocks, also up today. The Nikkei 225, look at that. I mean, this is the third day in a row where Asian markets are on the up and up, extending record gains. Banking stocks boosting Japan. Why? Because Governor Kazuo Ueda, that is the governor of the Bank of Japan, has continued to hint that he's going to raise interest rates. And if you raise interest rates, banks earn more in terms of their net interest margin. So that's what's driving the banking index over in Japan. Over in the United States, Dow Jones Industrial Average, new record, 48,977, continuing where it left off in 2025. S&P 500, 6,900. Analysts are saying that could be 7,700 by the end of this year. Double-digit growth for them. And the tech-heavy NASDAQ also on the up and up. But that's not the focus. The focus is Venezuela. The focus is oil and gas. The focus is energy. A snapshot here of the U.S. energy ecosystem, starting with Chevron, the only U.S. company that is still in Venezuela producing oil based on a permit that it got from the Biden administration. 5.2% growth. Chevron was up almost 10% in trading yesterday, pared back some of its gains. Valero, which is on the downstream side, they are a refiner. They have fuel stations across the United States. In Texas, where I went to university, I actually used Valero, got one of their credit cards to buy fuel. 9.25% growth for Valero there. And then Halliburton, everybody knows Halliburton. Rest in peace to Dick Cheney, former U.S. Vice President. They do oil and gas drilling, surveys, a number of services that they provide to the energy sector. So upstream, downstream, midstream, however you have it, energy stocks all on the up and up over in the United States. This is where we're going to kick things off with our guest, Basil Abia, who also is in Abuja right now, co-founder of Truva Company. Chris Wright is set, that's the energy secretary, is set to talk to oil and gas executives this week in the United States to convince them to go back into Venezuela. So let us start this conversation with Basil Abia, co-founder of Truva Intelligence, joining us live from our Abuja studios. Basil, Happy New Year to you, and thank you so much for joining us. I wanted to get your take on what we've seen so far. Can the U.S. practically oversee oil and gas operations and everything else in Venezuela? I know you're an honest guy. Give us your honest thoughts.
Rotus, happy to see you and talk to you this new year. I wish you the best for the new year. It has to be said that it's not practicable at all. And the major reason for that is that you need the national security element to combine for that. If you look at Venezuela, especially the production regions like the Orinoco Basin, for instance, there are a number of collectivos. Now, in colloquial Venezuelan lingo, collectivos are armed terror groups or armed paramilitary groups that support the current dispensation. And they are very violent. They also coincide together or work together with armed gangs who are mostly into drugs. And so they control these production regions. And unfortunately, even with the might that we know, the military might that we know of the US, it's going to be very difficult for it to be seamless. So direct control is not going to be seamless. It's not practicable at all. And there would have to be a lot of deal making for some sort of a concessional model where they make deals with the leadership of Venezuela as it is right now. As you know, of course, the interim president was the former vice president, Dressel Rodriguez, and she has now taken over. And she's been having conversations with Marco Rubio and White House over the last 48 hours. So if they play ball together, so to say, in that sense, the US will have a semblance of control over oil and gas It will not be direct, and they will be able to have private capital, especially the super majors from Texas, come into play. There's also another dynamic that a lot of people have to understand with the Venezuelan oil scene. The infrastructure is derelict. You know, this is a country that at their peak, they used to do 3.5 million barrels per day in the 1970s. Now they're barely making 1 million barrels per day. Just last month, obviously, this is due to punitive measures by the US. They were only able to export 500,000 barrels per day. What is the reason for that? The entire export terminal infrastructure is underperforming. It just has over 1.7 million barrels of export terminal capacity. Their largest export terminal is the Puerto Jorges terminal, you know, and it only just about 750,000 barrels per day capacity. You also have the issue with heavy crude. A lot of people don't know this, but Venezuela's oil is basically heavy crude, which is completely different from Nigeria's sweet Bonny Light, you know, in that sense. And then aside from that, even if you have the 303 billion barrels of reserves, where's the technology to be able to do the extraction? Now, let me go into some petroleum engineering specifics. For you to be able to extract heavy crude, you're going to need a lot more than the normal extraction method. You're going to do some steam-assisted gravity drainage. And the steam-assisted gravity drainage, for instance, ensures that you have to steam the reservoir. So you have to put drill two wells in there. The upper well has to be forced with steam, and that steam boils the heavy crude. So the heavy crude now becomes less viscous, and that reduction in viscosity allows for the gravity to move downwards to the second well. It's that less viscous state that you can now extract the crude. And apart from it, don't forget, you also need to steam the pipelines, the transmission pipelines, because it's still viscous, even though you have now reduced the viscosity by the steaming. So sorry for going too technical, but all of that technology needs electricity. And Venezuela has a similar energy crisis with Nigeria in terms of electricity production. They have rolling blackouts every day. It's so bad, especially at the hinterlands. The major cities are faring better, but in terms of the infrastructure to carry out these steam-assisted methods that I mentioned, you're going to need north of 15,000 megawatts per day. They don't have that capacity. That's going to come at a $20 billion cost. That's going to take time, you know, so direct control is impossible right now. What is practicable is a concessional model. So think of it as a semi-protectorate model where local politics, local governance is still controlled by the Venezuelans, but then the entire industry, or a vast majority of the oil and gas industry, is taken control by the private capital of the super majors, and the incentives have to be right. I'm telling you, the incentives have to be right, because even if global crude is selling at $100 per barrel, because of all of the externalities that I've highlighted, it's going to be very hard for the balance sheet to look very healthy 10 years from now. And it's also going to take at least 10 years to switch from the current under 1 million barrels per day production levels to 3 million barrels per day production levels. So to answer your question more directly, it's impossible.
Hey, look, Basil, you're the co-founder of Truva Intelligence. We don't mind the technical descriptions here. We appreciate that very, very much. So based on that, we know that Chris Wright, U.S. Energy Secretary, is going to be talking to oil and gas executives this week, according to sources. We know that ConocoPhillips got a $10 billion judgment against Venezuela when Hugo Chavez chased them and ExxonMobil and other oil majors out, just woke up one morning and decided to renegotiate contracts. So what would it take if I put you in that room, if you are an oil and gas executive and Chris Wright calls you on the phone and says, Basil, I need you, and assuming Truva Intelligence was an oil and gas company in America, and it says, I need you guys to come and bring the billions of dollars that are going to be required for everything you just described, what would it take for oil and gas majors to come back into Venezuela? What would they want to hear, or assurances what they want to get?
You've put me in the tight corner, but I think I can answer this in two ways. The first part is you have to understand again that for anything meaningful to make sense to the balance sheets of the super oil majors, it has to be a 10-year program. There has to be a 10-year policy continuation at the very least. And I'm looking at Goldman Sachs forecasting in that regard. You know, you have to do 10 years north of investments of up to $700 billion US. There has to be policy continuity. The multi-cycle politics in America has to ensure that even if the Democrats come into play, it doesn't affect, the arrangements, which is very implausible in that sense. So there's already a premium political risk that is now going to have to be discounted. And unfortunately, I'm not sure that this present White House, Trump White House, can give them that, benefit of the doubt, or give them those assurances that, look, there will be policy continuity for 10 years for them to be able to maximize the returns. So what can the Trump White House give to these super oil majors? The only thing that they can give to these super oil majors are some incredibly fat fiscal incentives. When I mean fiscal incentives, I mean some of the highest tax rebates you will ever get. That's the only way to just, incentivize, for instance, ExxonMobil to come into play. There are other minute details that can also help water the deal. So, for instance, assurances that ConocoPhillips will actually get their full settlement in that sense. Also, political arrangements with the current arrangement right now in Caracas with Dressel Rodriguez. I don't know to the extent of Marco Rubio's influence on her, but I do know that right now she's the de facto lead or the face of Venezuela in Caracas. If they decide to go the neo-colonial way, the 18th or 19th century colonial way, then you expect to hear a governor general being appointed, but that's going to be a least likely scenario, right? So the most likely scenario now is make sure that the settlements are complete, make sure that every single joint venture deal, the state petroleum company has little to no influence in those joint venture deals, so that no matter how bad things are, at least in 3 years, there are some maximum inflows that come into play. But unfortunately, because you're looking at how bad the infrastructure in the oil industry in Venezuela is, there is the max you're going to get in terms of output, for instance, in terms of exports, will be 1.5 million barrels, and that's if you do production optimization, because you can't really revamp the entire derelict export terminals or transmission pipelines in 3 years. You cannot revamp the entire upstream technology in 3 years. It's impossible. You cannot guarantee security in the Orinoco Basin that takes in 99% of the 300 billion barrels in reserves, So what you can actually do is just fiscal incentives, settlement guarantees, and then, assurances that all the JVs would have the Exxons, for instance, or the other American super majors taking full control of that. That's the most that the White House should be able to give to incentivize the super majors.
Duly noted, Basil. We've got to wrap up. But what's your take on how energy stocks in the U.S. have reacted? Are the investors being overly optimistic? Just your quick take on that as we wrap up.
Yeah, I think the optimism is coming from the fact that you are going to get, at least even if it's just 10 years from first oil, you're going to get 300 billion reserves in your balance sheet. I would say balance sheet reserves. That obviously is paper value, but at the end of the day, that expectation is exciting. There's also the settlement incentive as well that a company like ConocoPhillips, for instance, will be looking forward to. So that expectation of future earnings is there, but it is mostly paper value. So think of this as a headline, incentivizing reaction in the capital market.
Basil Abia, co-founder Truva Intelligence. Got to have you back to talk stuff going on in Nigeria. We really appreciate your insights looking at Venezuela's oil industry and all the updates coming from it. Thank you so much for your time live there from our Abuja studios.